welcome to the trading day. Happy Monday to everybody. Hope everyone's having a great start to the week. The market sure is off to a great start. Really exciting hop off of the get-go here. I'm just loving this action. Got good news on the trade front over the weekend. But, we'll wait and see because it seems like all year long, we've seen, news come and go. Some things that we thought were good news were bad news. A lot of things we thought were bad news were good news. So just kind of have to wait and see how it all plays through. Anyways, Brian, how was your weekend and how are you doing this morning?
Yeah, I mean, we all woke up this morning to some excellent news on the trade war and seeing that China and the U.S. trying to come to some sort of agreement. We'll see where that all leads to. Obviously, both sides started with the extreme. Uh, Basically, let's just shut everything down until we kind of figure out what we want to do. So it looks like they're going to, continue to talk here in a couple weeks. The market obviously loving it. And we're right back where the lows were. I'm just looking over at the screen here in January, just above the highs in March. So kind of an interesting spot in the market here. Things are moving. We got a lot to talk about too. And then we also, Joe, we're going to talk about a trade on Amazon, right? Is that right at the end?
Yeah, we got a trade out there on Amazon. If you are a subscriber to the Trading Zone, you've already got that in your inbox. Looking good right now. If you are a subscriber to the Trading Zone from Equity Armors, check it out at equityarmorinvestments.com. You got to take advantage of the Palantir trade we did last week, and boy, that was a fun one. It set up really nicely. We were able to get in and out really quickly. I mean, it just felt obvious. It's way too high into this earnings. Too much uncertainty out in the world. It's really hard to see it ripping higher on, a 230 forward PE. Really hard to see it ripping higher. At the same time, Brian, what we say, if it pulls back, there's going to be buyers for it immediately. So really fun. Got in, got out. Quick profit for that, and that's what the Trading Zone subscribers are in for. And we got another one hopefully this week, and to see some more profits. We'll be trading Amazon. We'll take you through that as we go. I think Amazon's kind of well positioned in the trade war. They got a really diverse supply chain. They're all over the world. They can kind of mix and match. Get the products the cheapest as they can. As long as the U.S. economy is going to be strong, Amazon's going to do great. Oh, by the way, they're right there, well positioned in the cloud infrastructure, right positioned in the AI trade. I think the future obviously is very bright for Amazon.
Yeah, the just to circle back too on the Palantir trade, that was nice that we had done. Obviously, we outlaid a trade there headed into earnings. It was a put spread. Had you been subscribed to our newsletter, we also our service, we also got people out of that put spread, took some profit on that. That was a nice little winner. And now Palantir, where is that trading at? Just looking up on my screen over here. All the way back to 116, just below 117. So that's obviously a great move for the stock. Traded all the way back almost to its all-time highs after the earnings kind of shook some people out. So it's been a mover, and that's why you tune in and continue to update positions. Options aren't really meant to just put on and then close your eyes. So they're kind of meant to be continually managed, which we do inside our mutual funds, obviously, in our volatility stock funds that we have that almost act like hedge funds for the public, for anybody that has a minimum of $1,000 to sort of get in and get to our strategy. So obviously you can go check that out at rationalmf.com. Check out our mutual fund there, find out more information about it. But the strategy of hedged equity and volatility and option management has really played out this year in 2025. So expect more of it. But as people kind of trickle in here, Joe, obviously you guys, folks, don't be afraid to ask questions. We'll answer them midway through the show if you got any. And but other than that, Joe, what do you got for us on tap this week? What are we looking at?
Yeah, let's let's jump into it. Of course, big week coming through. Let's just take a look at the newsletter sent out this morning to the subscribers for just the rational. This is free. You can go to equityarmorinvestments.com and get this sent to your inbox for free. This is kind of been the story of the market so far this year. Good news, bad news. Who knows? There's a story I tell my kids a lot when they're very frustrated. A farmer lost his horse. A horse runs away from the field one day, and his neighbors come to him and say, "Oh, what terrible luck!" And the farmer just says, "Maybe." And the next day, the horse comes back, but guess what? It came back with 3 wild horses, Brian. And the neighbors come and they say, "Oh, what amazing luck!" And the farmer says, "Maybe." And so tries to ride the horse and tame the wild horses, and he falls off and he breaks his leg. And the neighbors come to him and they say, "Oh, what terrible luck!" And the farmer says, "Well, maybe." And the next day, the conscription officers come by. There's a war, and the emperor needs more soldiers, but they can't draft his son because he has a broken leg. And the neighbors say, "What fortunate luck?" And the farmer says, "Maybe." So that's just kind of the story. We don't really know what's going to happen tomorrow. All year long, we've been seeing these news coming through. It seems terrible. It seems amazing. The answer is just maybe. It's the same today. We'll wait and see how it plays out. I think we're going to see more volatility is my narrative for this year. So yes, we got this trade dance going on. The devil is in the details. Great news. We're pulling back from the brink. Tariffs are coming way down. They're still higher than they were to start the year. We'll see what the ultimate deal comes down. I think we're getting closer to something better than where we were at the start of the year. So I'd love to see that, but I need to see the details. We have a trade deal or a war deals, which is great news, obviously. But what are the trade-offs there? India and Pakistan not going to go to a full blown out war. Fantastic news. We love to see that. India is not happy with how it was announced. There's other war out in the world too. Iran, U.S., Houthis. Lots of conflict there. The U.S. So a side deal with the Houthis in Iran, making Israel upset. Good news, great news. Who knows? There's the Gaza deal. There's a hostages coming out. Great news, but it was another side deal. Israel's not thrilled with a lot of that. There's the Russia-Ukraine deals going on. So we just need to wait and see what happens. We don't really know for sure. We love these trade deals. We want to see more of them coming through. The certainty, I think, is what the market really needs to be able to continue their growth, Brian.
I think the level of volatility in the marketplace has all been generated on businesses not really knowing what to do and how to react to all the tariffs, the wars in the world. Is there going to be peace or whatnot? So obviously affecting the commodity markets and volatility there. So there's really a lot to digest, and the more that the market can get some certainty, like you said, probably the lower volatility goes and the higher the stock market eventually goes here. So really interesting how things are sort of shaping up and shaking out. And I do think we'll kind of be in a little bit of range here, but like you said right here on the news, US, China, 90-day reprieve as they will continue to talk, lower the tariffs down to 10% for now, and try and figure out where they want to end up. It'll be kind of interesting how 2 countries that kind of hate each other could try and figure out some common ground, I guess, on how to tax each other on things, maybe. I'm still a little skeptic how exactly this is going to play out, where you're like, yeah, we're finally going to settle in on some number here, and then we're all going to get along with each other. I don't know that doesn't escalate somewhere else down the road, but we'll see.
Yeah, and it's almost like there still isn't a zero-sum game, because it seems like the win for the U.S. is to get some of like the high-tech, get some of the high-tech manufacturing back in the U.S., which is kind of like this, economic warfare, which kind of melds into like, hard warfare, where it's like the technology used to design the weapons, where are they going to be developed? I think it's really in China's interest to keep that tech development in China, but that's really what's really important for the U.S. too. So I think that's the really tricky thing. It's like where this Cold War off on switch is kind of hinging is like this tech stuff.
Yeah. You know, also in some of the other news that's out there or whatever, obviously let's kind of breeze through this because I really actually want to spend some time on volatility and what the S&P are doing. It's very interesting what the skew is doing today. We obviously always get into that in our show. That's really our specialty. But obviously, the other piece of news that comes out here is drug prices. Uh, you know, the U.S. Trump administration trying to say enough is enough with the level of increase in pricing of drugs, right? That has not correlated at all to CPI numbers, to inflation, far exceeded. Almost feels like a college education type inflation. So that'll be interesting to see how they can kind of take charge there. But really, the news this week, CPI, PPI numbers will be another added data point on what the Fed can actually do or can't do. And so the more the Fed sort of removes themselves from the picture, as we saw in the Fed meeting last week, where Powell basically said, we got to wait to see how the tariff thing shakes out. We're in a good spot in unemployment. We know that inflation isn't quite at 2%. So we really can't move off of the number that we're at right now. We need more data. We need to wait to see how this plays out. So the CPI number will be another, feather in their cap to see what they can potentially do.
Yeah, we're not necessarily going to really know if the Fed's going to say what happened over the weekend with China is enough. It's hard enough evidence for us that there's not going to be significant tariffs driving inflation higher. So the market's going to kind of decide for it. I think the market's going to really be looking into these PPI, CPI numbers for the cues for inflation. I think they're kind of expecting the Fed to just be soft. If the inflation is in line, I think the market's a little worried about a softening economy. I think inflation coming down is just going to make it so much easier for the Fed to do so. So I think the market's going to react in a big way on this inflation data. So,
yeah.
Anyways, let's look at the skew index. We look at this every week. We look at this every minute on our trading screens. It's kind of giving us a little bit of a view into the future of volatility. This is one of the factors we look at when we're looking at volatility. This is the 25 delta put versus the 25 delta call 30 days in the future in the S&P 500. And you can see it's coming down in a big way. It's really leaking lower into this lower regime here, Brian. Maybe we could see it down here at this 5 level here. But absolutely a fall smash. You got the VIX under 20. First time it's been under 20 in a while. And the market's just getting a little bit of certainty finally.
Well, actually, we pulled this chart up before the market opened, or as it opened, I should say. And actually, that skew, I'm just looking over at my screens in the background here. It's at 4.9, right? So it's actually into the five level here. It's made a huge extreme move down. 5 is probably an area of maybe like some support now. But I think this is an indication that with the trade news out and a sort of a 90-day window of waiting period, along with the waiting period from the prior April 2nd tariffs that have now been pulled and put back on hold, we're really kind of sitting at where I think the downside risk to the market is sort of dissipating. Like the 5,500 level.
Dissipating or currently like really cheap?
Well, those puts have become kind of cheap.
30 days out, the puts, the 25 delta put 30 days out are really cheap right here is what it's saying.
Yeah. And they are, but it also is like, is the market going to go below 5,500 on the S&P, right? And if you don't think it is in the next 30 days, then that put is in fact a sell, no matter how cheap it is. Now you're not getting the premium that you once got, a little while back here for a downside put. So there is some risk there. And I'm not saying I would go ahead and just, endlessly sell those downside puts, but I do think the downside is somewhat limited.
So we're getting the sell in May, but it's the sell the downside put.
Yeah.
Get out of everything. If you want to own anything, own the market below 5,500 because you're just going to sell that put.
Yeah, I think it's going to be, the U.S. and China are going to try and talk over the next couple of weeks here, and then it's going to be Memorial Day, and school's going to end. People are going to start going on vacation, and you're going to get a summer slowdown in June, where I would probably want to sell a downside put in there.
Well, yeah, speaking maybe a little bit of normalization too. And speaking of the normalization, we got the VIX futures curve finally, back into contango. Where we're seeing the spot below the front, below the second, etc. That is like, I mean, that's the first time we've seen it in a while. And the title of this show, I think, is the market will the market soar on or stall next? I think this might be a clue. Like, this could be fuel for the market to continue this rally. We haven't seen this action in volatility. This volatility is kind of flashing a green light here.
Yeah, it is. It's finally kind of gotten back to normalization. I mean, wow, look at that VIX futures curve from like 2 months ago.
Yeah.
Um, and it's now down below. I will say that the VIX futures though maybe are getting a little cheap here. So if you did sell that downside put, I might want to dab and buy a little bit of VIX futures in case that goes wrong on me, because
Mhm.
if we look at some of the mean reversion of just a week ago or a month ago, obviously it's trading higher than where it is today. So um, these VIX futures, I feel like, are at a pretty big discount to where they could kind of stabilize and remain.
Yeah, no, I think, but it just kind of depends. It just kind of depends on these trade. For me, these trade deals, get them past us, get the budget past us. I think the market can just focus in on the economy, and I think the trade deals will be, stimulative enough. The budget, there's potential for more stimulation coming in there, and of course the Fed lowering rates. So I think there's all sorts of reasons for optimism. And keep in mind, for me, we're still in the very early stages of this AI revolution. People are talking about these large language models, how amazing they are. I think they're just interesting software. They're just kind of cool. I love what they can do. That's just scratching the surface of what AI is going to be able to do in a couple of years. So I'm very bullish on the productivity innovation of what AI is going to bring to us. So I think there's room to the upside if the economy is strong and there's stimulation going on all sides here.
So, I mean, from the sounds of it, you sound extremely bullish on like some of the breakouts that we had. But is the VIX? Let's just stick on the VIX real quickly, because then I know we'll get into some charts on the S&P and where that can go. But
Mhm.
the VIX, Joe, I mean, below 20 here, isn't it a buy given the amount of like at the money movement? I know I talked about selling maybe the downside put, but I'm just talking about the volatility level at the money. Is there some level where like this VIX has got to? It's probably not going to get below.
I kind of playing devil's advocate here. You got this downside put. I think this 30-day downside put is a buy. I think that's a buy. But I think volatility itself, I'm not certain about it. I think 20 range is still kind of elevated. Uh, I think the market is kind of pricing in these good news, and that's wrong when the market prices in good news, especially in this recency. We like these a lot of these deals have not really come to fruition, but I think everyone kind of is assuming. For me, I think the base case is that these trade deals get done. Even though it was kind of silly to like start all this fight begin with, or be with a little lack of strategic planning, but it's kind of the base case that a lot of them get done.
So I guess maybe one strategy it sounds like you're leaning towards for people to sort of take away from this is own tech, but maybe own some volatility here, because we still could get a few little carpet shakeouts on the downside, and that downside has become cheap enough to sort of use as a hedge rather than just, even though you might have a limited floor on the market, which is my view. I think it's limited on the downside. There'll be enough of like a move down, trade around things, get out of your hedge, rebalance, but in general, stay
Well,
long tech, but stay
let's
hedged.
look at the charts and we'll see.
Okay.
We'll talk it through. We're looking at the S&P 500 chart. So, boy, I went too many. Hold on. Where's my S&P? I lost it. Let me pull. let me pull up the S&P 500 somewhere. Um. All right.
Yeah, while you're looking to pull that up, yeah, we really kind of had like this breakout level. I would call it back at like 5,700 on the S&P.
Mhm.
Yeah, and
So
so describe maybe like what we're looking at
500
here.
cash. Yeah, this is fantastic. Above this level here, absolutely, you have to love that. Above the 200-day moving average, you have to love that. But there's, and yes, this 50-day moving average is moving lower, but amazing to be above this 200-day moving average. But and I think a lot of people looking at this chart might say, "Hey, it might make sense to consolidate sideways now." We've had this tremendous recovery up off of here. We still have this declining 50-day moving average. If we can trend sideways for a month or two, heading into the end of the and heading into the third quarter here, you might see this 50-day moving average ramp up higher, get a little bit of uh, upside down head and shoulders here, and able to ramp higher. That makes a lot of sense to me. I think to say in the short term this bottom here is off the table. We're not going to be touching there again. I don't know if I would confirm that, but it would take a big breakdown in the trade talks.
Yeah, I think depending on what kind of trading program a client was in, I think for our clients we sold some deltas, as we like to say in the options world. We trimmed some of the position a little bit on the open here because yeah, there could be some back and forth, little bit of consolidation here on the S&P. Where's that 50-day moving average? How far down is that, Joe?
That's at 55.50 basically. And the
Yeah.
200 day is at 57.50. And I get that. I think I absolutely would sell that 55.50 put just looking at this chart. That would be an area I would be really comfortable getting back in if I were flat or neutral. Almost would say this kind of expect support here down on this 200-day too at this 57.50
Yeah.
would be an area where you might look at this and say you would expect some buyers to hop in here. So I totally get why the put sellers would be there. And I'm starting to lean into your position here of selling this put, owning the volatility. That seems like a really attractive hedge. You have the VIX really low. You might see volatility either way here still. But an area to buy the market could very well be this downside by selling a downside put.
Yeah. See, I think when we're looking at the market, we don't just look at just fundamentals or just technicals or just volatility levels. You kind of have to look at all of that together.
Yeah.
And really, when you start to put these pieces together, I think what we find is, you look at the areas of support, resistance on a technical basis. We talked about the fundamentals with the trade and the Federal Reserve and where interest rates are going. And then you look at where volatility is. Yeah, something like selling that put, owning some VIX futures. I think that's the trade right now.
Yeah, and we're always kind of looking into like clues. We really like Bitcoin as kind of a risk-on clue. We like gold as like a risk-off clue. Both are, inflationary protections. It's kind of interesting how that's been playing out. We had a gold trade on earlier in the year, Brian. I think it was when it was like really, really hot, and it gave us a trade that I like to do, just not necessarily going out and rushing it and buying gold at the top. Kind of putting a trade on. We're going to collect some money if gold trades sideways or lower, or participate if it goes higher. It's like maybe a clue of what we're doing in Amazon later. But Bitcoin, last week, absolutely racing higher. It's kind of a clue. Hey, you got the same thing going on in a lot of tech names last week too. Great week for tech last week. Semiconductors were looking fantastic. Kind of a clue. Something's looking good around the corner. And even though Bitcoin's not really participating in the rally today, it was a great leading indicator for us.
It sure was. It actually felt like it was almost the leader turning around as it got down to 80,000 in Bitcoin. It
Mm-hmm.
was swiftly making a move and almost back to all-time highs here ahead of where the market is at. So
And
that has tended to
this chart in a vacuum, Brian, I like this chart. I like this consolidation here. I don't need it to be racing to all-time highs just right away. It's almost better when it's just kind of collects itself here. We lose some of these like newcomers here, consolidate here, and then go higher there.
Yeah, I would probably be a buyer of Bitcoin if it got back down to like 95,000 or something like that.
Mm-hmm. Mm-hmm. Or if we break through to all-time highs and then comes back down and then retest here, that's kind of how I like to trade it too.
Yeah.
Coming back, it's kind of confirmation here. Buy it here, tight stop. If it goes down here, you're out, but you're in it for that. Anyways, we've teased it all show long. We're going to be trading Amazon here. Let's take a look at the Amazon chart. A lot of similar stuff going on in Amazon as the rest of the market. We had this death cross here, and it's so funny. Like, people talk about these death cross, how it's like going to be like the doom and gloom. It's so funny how frequently that happens on the low of the market, right? And I think there was a lot of selling here. There was a lot of fear here on this cross, and it turned out to be a fantastic buying opportunity for sure. Now, I'll be honest, I'm kind of surprised. In a vacuum, the news makes it not surprising we're racing to the upside. But just looking at this chart, you would be surprised we just raced through this 200-day moving average. So what do I do here? I love Amazon. I want to own it in this, new trade dynamic. I think it's going to be able to shift its supply chain across the world. If the economy is strong in the U.S., Amazon's going to do great. I love Amazon for all these reasons, the cloud, et cetera, et cetera. So we're above this 200-day moving average here. This is where I'm a buyer for sure. I'm going to sell this 200 put, Brian. I'm going to collect some premium now. Got this level here. It's 205. Really think if we break above here, boy, this is going to look really nice here to the upside. So yeah, I'm just kind of looking forward to potential upside here. I get this high of 230 earlier in the year. Don't necessarily need it to go all the way up there, but 230 would be amazing. So I'm going to look at the 215, 230 call spread versus selling that put. This morning when I looked at it, it was even money to get that on. So I'm risking nothing at Amazon right around 208, 210, risking nothing all the way down to 200. Buy it at 200 if it closes below 200 in June. And I am in the rally above 215 to 230. So not risking a lot. Except, of course, I'm long Amazon at 200. I'd love to do so, given that it's 4 or 5% higher than that currently. And I'm in the name from 215 to 230. I get to participate on all that rally.
Yeah, I really like this trade. I think you laid out the levels. The 200 level, I think, is a buy for Amazon. That's that 200-day moving average, and that'll probably correlate with the rest of the market on some of these lower levels that we talked about with the S&P. We actually didn't even talk about the Nasdaq, but Nasdaq down at 20,000 a buy. We did talk about that last week. If it was below 20,000, it was a buy. Now I think that becomes support. So Amazon should correlate with that. You talk about the trade deal here. I think they're going to work it out where it's not going to be disastrous for Amazon in terms of what the tariff situation is going to look like in pricing power that the company is going to have on their goods that they import. So, you look at that 215, 230 call spread. Yes, we do have about $8 or so more to the upside to get to that long strike, right? So that's another 4% or so move to the upside by June that you need before you can start participating. But I think that's okay to maybe wait on that. If it pulls back, great, short the put. I'm getting long stock at 200. This might be a good kind of wait and see spot for the stock with making sure that there's still some upside participation, right? And if I miss a couple bucks from here till June, and let's say it goes to 210, doesn't get through the 215 strike, I'll reevaluate and figure out if I want to buy Amazon at that point. But right here, I really like this trade. It's kind of like selling the wing side of it, we call it, where you're selling you're buying the kind of the middle option, you're selling options on the end. So as it moves away from that middle, you'll start to get short volatility, which I think is where we want to be, whether it's a gap to the upside or a move down, we'd want to be a seller of volatility on those wing areas.
Yeah, and if if it does have a small move higher, I am in cash. I do get to collect a little bit of interest payments there too.
Right.
So not the worst thing in the world. Yeah, 214. That's not the best trade. I'd rather be in the stock than in this trade. But there's a lot of risk here. I think very easily could pull back down to 200. And the trade-off is: do I wait? Do I patient? Do I just put a 200 bid in and just hope I get filled? Or do I wait till it goes to 215 and then chase it above there? So for me, that's just instant in the trade. Decisions made. Hey, we go to 200, I'm buying it. If we go to 215, I'm already in it. So it allows me to sit in there. Now I could have designed a trade, maybe sold a 205 put, collected a little bit more premiums on that sell, but I think that's a little bit too close for me. I think rather just a little bit more. And I'm in the trade even money. I think I can't really beat that.
Yeah, I think the even money is really the key there, because if the stock just kind of moves a couple percent either way, didn't make money, didn't lose money. Although, right, like you said, collect interest on the cash because you want to have this cash covered on the downside against that put. So in other words, if you sold one of those puts, that's equal to 100 shares times $200. That's $20,000. So I'd have to have $20,000 set aside to buy the stock if I want to do this unleveraged and collect some income on that. So that's what I'm looking at. I like the trade. Obviously earnings, we got to wait all the way till August for the next round of earnings on Amazon. So this isn't our typical like earnings kind of play on this. This is just a directional, here's a stock we really like, and it's in a spot that can perform really well if it gets a little bit more of a breakout to the upside. Yep.
And just if we keep on hearing more about cloud infrastructure, more about people spending money in the cloud, Amazon is there. Amazon has web services. Amazon will be doing good. And I think it's just good economy, a boost to the economy with a low inflation, a boost to the economy with a budget bill. We're going to see this stock soar.
Well, that should just about do it for the show, Joe. I want to tease something for next week, though. I think next week we need to talk about, I have a big theory on Bitcoin, on why to own it. And I want to give that theory, but that's going to be more than just the 2 minutes that we spent talking about Bitcoin here. So I'm going to tease that for next week. Make sure you
cliffhanger.
What's that?
We're ending on a cliffhanger.
We're ending on a cliffhanger, yes. So make sure.
Gonna tell me.
Yeah, well, Joe, you'll just have to wait till next week too when we produce our next one.
We're rolling out the secret sauce on you guys.
Yeah. So make sure you tune in next week. We will have our Bitcoin theory there. We'll have another trade of the week. If you want to continue to follow along with our trade ideas, go to equityarmorinvestments.com, sign up for our subscription services. We've put out some excellent trades in the past here, so love to have you tag along with that and get constant updates and feedback as we sort of modify our trade idea. So make sure you tune in there and then check out everything else that we do at Equity Armor Investments, always helping retail out and trying to risk less to make more, as my old producer at CNBC used to say. But make sure you tune in every Monday, 10 a.m. Eastern, right here on the Trading Zone. We go live. Check us out also on YouTube. If you missed the show, check us out, Equity Armor on YouTube, or follow Joe or myself on Twitter. Myself at Brian Stutland. Joe, you can give a shout out on your handle as well. But this is both of us portfolio manager at Equity Armor Investments. Joe, where should they check you out to?
Yeah, I'm Joe Teague on X, formerly Twitter.
All right. We'll catch you next week. See you then.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.